Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, Katie Greifeld and Scarlet Fu counting it down to the closing bell. Here to help take us beyond the bell, we have a global simulcast in the hot seat today. It's Miller and Paul Sweeney. We bring together all of our audiences, Bloomberg Television, Radio, YouTube, etc. And Paul, it looks like we're going to do it. Or should I toss it to Matt? In any case, 7 straight days.
You can. I'll take it, Katie.
Yes.
Whatever you throw my way. Yeah, 7 straight days of gains. That's the longest streak that we've seen in 2 years. And we're helped by, obviously, falling rates. You have the 10-year trading at 4.57 right now. Just about 20 days ago, I'd say we were up, maybe even less. We were up at 5% on the 10-year. You've also got falling oil prices. The Bloomberg Dollar Index has come down. So everything looks good for risk-on moves, and that's why we've seen them for a week and a half.
Yeah, I think what gets my attention here is oil. Off more than 4% here today. WTI crude oil at $77.43. It really gets your attention, and it just kind of seems counterintuitive when we've got 2 hot wars going on over in parts of the world where oil is kind of important.
Yeah, that's a really good point. It feels like oil's been losing momentum ever since the October 7th attack by Hamas on Israel. Like it definitely climbed, and then since then it hasn't really regained its any kind of momentum there. And it's not just oil. We're looking at gold, silver, copper, the entire commodities complex lower as the dollar strengthens.
Yeah, it's been interesting, of course, to watch the commodity space as those geopolitical tensions really arise. But right now, we're about 10 seconds away from the closing bell. As you take a look, the S&P 500 looks like we're going to finish with about 0.3% when it comes to gains on that index. That's good enough. 7 straight days. How many times can we say it? Longest streak in 2 years. The NASDAQ as well having a better day as big tech really catches a bid up about 0.9%. And of course, the Dow Jones going to finish about 0.2% higher, Scarlet. And again, it's not necessarily about the magnitude on a day like today, but more this long streak that we're looking at.
And it is quite the streak. We're, of course, keeping an eye on the settling number so we can give you just how much the S&P has gained during that period. But let's take a look at the group performances here. For the 24 industry groups in the S&P 500, retail, consumer durable, and apparel, and that's really home builders, and software leading the way, all up by at least 1.25%. On the downside, Paul mentioned oil prices coming down, and that is dragging the energy complex lower. That group is off by 2.25%. Materials and real estate investment trusts also losing ground.
I'm looking at some gainers. Here, starting with Uber, $100 billion company, had a second consecutive profit on the bottom line, but its 9th consecutive operating profit, which beat analysts' estimates at $1.09 billion. They also had bookings that were better than expected, and although sales fell a little bit short, they said it was a business model change. Investors seem to be happy to give them the benefit of the doubt. Also, Datadog.
That's still a thing.
Had you ever heard of Datadog before? Because I had not, and it's like a $35 billion company. Apparently, they make software for the cloud like everybody else in the entire world. But third quarter results beat, and they boosted their forecast. Bloomberg Intelligence said that supports their view of the long-term demand opportunity for cloud software makers. DHI, DR Horton, DHI the ticker, also up after fiscal 2024 guidance signals growth ahead. Obviously, builders have fared well as, existing homeowners have declined to move out, and that means new homes are the only choice. And then Hims. You know Hims?
Is that like Skims? What's Hims?
Hims. I think it's like pills that you take if you need hair.
Yeah.
So can you tell us about that?
So it's the market for me. Hims and Hers, apparently, is what it's called. I think they want to be more politically correct. Those shares absolutely soaring after they came out with earnings also that were much better than analysts had expected, and analysts were very happy about that. Yeah, up 11% there, Hims. To 697.
All right, on the downside here, I mean, there's a couple themes out there. One is that earnings still matter. And boy, if you miss, this market's going to take you out to the woodshed and fast. I go with some industrial companies here. ADP, Air Products and Chemicals, APD is the ticker. Some bad results there. Revenues missed. Costs are higher, margins are down. That stock down more than 12% today. And then another stalwart of the industrial might of the U.S., Emerson Electric. Weaker than expected results. Had some analyst downgrades of the stock, and that stock was down about 7% today. And then the other theme here is just simply energy. With oil pulling back, you got a lot of names on the energy space. Schlumberger, Marathon Oil, Halliburton, Freeport McMoran, all down pretty heavy today on the pullback in crude.
All right, let's get to the fun stuff. Let's get to the bond market because it was another interesting day, that rally extending. If you take a look across the curve, of course, you can see there at the front end, muted moves, only down about, 2 basis points, pretty much unchanged when it comes to 2-year yields. Then you look out the curve, and that's where it gets exciting. 10-year yields down about 7 basis points, below 460. That bid continuing the longer you go out on duration. And it's going to be interesting to see how the rest of this week goes. Of course, we got a 3-year auction, I believe, today. It was pretty mild, but Scarlett and I were talking about this a little bit earlier. We have 10-year and we have 30-year bonds being auctioned off later in the week. There's still a lot of concern over who is stepping into the long end. Where is that demand coming from? Of course, as Treasury continues to boost its issuance, maybe by not as much as expected, but still, guys, I mean, there are a lot of bonds coming to the market.
Everyone get ready for and make some room in your portfolio. Let's break down some earnings. You have Gilead Sciences, the drug maker, reporting results. Third quarter beating analyst estimates. Adjusted EPS $2.29. Analysts were looking for $1.92. Revenue in that period $7.05 billion. Analysts were looking for $6.8 billion. So clear beat there. And Gilead raises its forecast as well. So the outlook is better than expected. And as a result, you are looking at the stock moving up slightly in after-hours trade, 1.7% higher. Gilead also maintaining its quarterly dividend at 75 cents a share.
All right, I'm looking at Rivian here. The company says that it has some, I guess, better news than anticipated. For example, the adjusted loss per share, we were looking for $1.32. They're only going to lose $1.19. They also said that they expect an EBITDA loss for the full year of $4 billion rather than the $4.2 billion that they had previously seen. And they're going to produce more vehicles than they previously expected to, although not by much. They were going to produce 52,000 vehicles a year. Now they say 54,000 vehicles in this year. And that's really the heart of the problem for Rivian, right? You can't get to scale when you're only making 54,000 vehicles a year. It's just tough. And they say they're no longer subject to an Amazon exclusivity deal. I saw my first one of those recently because they make big, electric delivery trucks for Amazon, but also not very many.
So that kind of goes to the EV story in general. Are we at a little bit of a flipping point, Matt, where it's maybe the demand isn't what we initially thought? I
mean, I think Rivian's a great example for that question because we always talk about the fact that early adopters got their EVs already, right? And rich people who want everyone on the block to know they're against climate change too got EVs already as their third car. So that market is saturated. Now you need people who just want to buy cars. And it's unlikely that one of those people is going to also want to shell out $95,000 for an 850 horsepower Rivian.
Especially if they don't have a charger in their garage and they have to go look, on the street or in parking lots for that.
Range anxiety is real. But Matt, you know the competitive landscape better than most. You think about some of these EV upstarts. It's not just Tesla that they're going up against. I mean, you have a lot of the traditional automakers coming out with their own EV strategies. Where does that leave a Rivian? Where does that leave a Lucid, for example?
Okay, Lucid far away, right? Rivian I thought was going to be a real contender because RJ Scaringe took a decade to set this company up. I thought, all right, he's taking his time, he's being meticulous. But in terms of, the incumbents, Paul and I were talking about this earlier, they're making something different. Tesla and Rivian and Lucid, they're making luxury products or super lightweight vehicles for very futuristic people. General Motors and Ford, they're just making cars that happen to be powered by electricity, and the consumer doesn't care, especially if you're going to charge $10,000 or $20,000 more, and there's nowhere to charge it. And even if there is, it's going to take you an hour.
That's the part that gets me, right? Filling up a gas tank takes 5 minutes, whereas sitting there in your car, otherwise you're charged if you don't do it. If you leave the car, that's That's kind of painful in this economy.
Also, I forget to charge my phone all the time. I can't remember. Like in terms of having to remember to charge my car, I could see it just turning into a disaster. But guys, we got to go. That does it for now for our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube. I'm sure you guys will have a great rest of the program. And just a reminder, of course, Bloomberg Business Week now on Bloomberg Originals. We'll be back tomorrow, same time, same place.